Hey, what's up, everybody? Thank you for joining me as we head into Monday. So, we're going to start off with a quick reminder of what happened to close out last week. Thursday, the markets ended at the worst at the end of the day. Friday, we saw the markets get extremely bloody, end at their worst at the end of the day. So, what catalyst do we have going into today to change that? Anybody? Yeah, exactly. There is no catalyst. Does that mean the markets are going to get bloody? No, it doesn't, because I'm going to go over this morning. I was trying to think what would provide the most value for people that are actually watching this morning. And I was like, all right, you know what? Let me go down a whole bunch of stocks because I've been speaking about different ETFs, different stocks. Some have gone down. Do I still like them? What's on my watch list? How am I going to make money today? So there are certain stocks that are definitely good plays this week. They have earnings coming out. For instance, Coke beat earnings this morning. They're probably up between 1% and 2% pre-market. Why? Because they are a return to society play. They're like almost, well, they're obviously a Dow play, but they're more like, okay, everybody gets Coke. You know what? I'm going to buy 3 2-liter bottles of Coke today. So that's the point. I mean, whether it's good times, bad times, recession, not recession, whatever it is, people are buying Coca-Cola products. You know, Coca-Cola products aren't just the soda. They have the juices, they have the waters, they have a lot of revenue sources. So I'm going to go over a bunch of different stocks, but we'll talk about the psychology behind the market. Unless you know there's a reason why your stock should do extremely well today, there's probably not going to be a whole lot of demand. Understand, Tuesday and Wednesday of last week, I was telling my platform, shit, I'm really confused. The market's off the hook going higher, and I think the market should be selling off. And I was in UVXY calls, and they were getting burnt at the time, and I couldn't understand it. Now, somebody will say, does that mean you love the UVXY today? No. If you miss the train going from $11 to $15 or $16, you know, that's the fucking ride right there. That's the spike that you're looking for. People that are like, yeah, market's going to take a shit. It's going down worse. Yes, it could be, but your risk is so much more because we just fell so hard on Friday. So I wouldn't say the trend's going to continue. I would say you could play the market 2 ways. You could look for the worst point today, which is what I'm considering, and then looking for a recovery. You could bounce off Friday, and you can bounce off the worst point today. So that would be a bullish strategy. The other strategy, reverse it. Look for the market to rebound this morning, or, you know, bounce higher at some point. And when it bounces high enough, you say, that spike was too steep going higher. I'm going to buy my puts right now because the market has no reason to turn around. So both are good, reasonable strategies to have. And both strategies would work. And I can mention a whole lot of stocks, which I'm going to mention right now. And I'll tell you, if you're buying puts at the high today, you're going to do well. If you're buying calls at the bottom of these stocks, you're going to do well because there's going to be some good movement. So first, I think the Dow is probably off maybe 150 to 200 points. So people are talking about Twitter right now and how Elon's bid is going to get approved because Twitter thought about it. Now they have earnings coming out. Everybody's got earnings coming out. Either if they didn't have earnings last week, they've got earnings coming out this week or next week. So pay attention. But Twitter has earnings coming out. I think it's either this week, the end, or next week. Now, if the earnings suck and they say like this to Elon, what's going to happen to the stock? So they tell, hypothetically, Elon, we're not going to do your deal, okay? Then earnings come out and they're like, we didn't earn anything again. He would sell his stock. Everybody would sell their stock and Twitter would go through the floor, right? So of course they have to accept his bid now that he has financing. So people are selling Tesla stock this morning. And we're going to get back to Twitter in 1 second. His bid on Twitter was, I think, 54.20, right? 5 and then 4.20 because he loves doing stuff that incurs 4.20. That's what he offered when he was buying when he offered to buy Tesla shares back at $420. Okay, so people are selling Tesla. It was down 3% pre-market. It shouldn't be down 3%. And now it's only down 2%. Because here's the catch with Tesla. When he needs financing, he's not going to sell his Tesla shares. He might loan them out or take financing against the Tesla shares, where if he doesn't repay the financing, he has to give up his Tesla shares. But he's not going to all and out sell his shares. So it was down 3% pre-market. I was going to tell people that's ridiculous. Now, here's the thing. If the NASDAQ gets beaten down hard today and falls 300 points, yeah, Tesla's going to fall to $954. So, yeah, it should be down 3%. It'll probably go down, let's see, if it goes 954, it'd probably go down about 6%. But that would be the markets getting extremely ugly, which I don't think are going to happen today. We saw the end of Thursday. We saw the end of Friday. People thought about it over the weekend. Institutions that were buying on Tuesday and Wednesday, well, shit. They could buy at a cheaper, they whatever they bought on Tuesday and Wednesday and push through the roof. And I'll throw out a couple stocks like Plug. Remember my Plug puts that I was in at $28? That shit went down to $21. I'm going to talk about Plug because I think there's opportunity in a lot of stocks. So let's go down my list right now. American Airlines, right? It's off 1% pre-market. It's just over $20. Here's the catch with airlines. When airlines spiked last week, and let's remember, they spiked like for 3 or 4 days. You can look at United Airlines, Delta, probably American, anyway, Alaskan, Southwest. The point is, when they were spiking on the last day, all the institutions, all the banks, they were selling covered calls. So that's how they protect their position, because there should be some consolidation with airline stocks. But they were on, I tweeted about, or I made a mention about that on my Discord platform, covered calls. Okay, now here's an interesting one. Carvana did a shelf offering last week, and that morning the stock went from $88 to $80, back to $95 on market open. So institutions, let's go to institutional ownership of Carvana. I'm going to the profile. Institutions own 124%. Let me explain how that's possible. There's only 100% of a pie, okay? So if somebody is shorting it 30%, they're borrowing 30%, right? They're shorting it. They're putting extra shares in the market. That's how institutions own 125% of Carvana. So two things could happen. If the market got extremely bloody, which is why it's on my watch list, if the market gets bloody, Carvana could drop 10% today. However, if the market turns around and the market is strong and you get a bounce day, they were buying Carvana up to $93 the other day. So the fact that Carvana's $81 or $82 pre-market, you say to yourself, green day, they're buying it back past 90. Red day, it could drop another $8. Okay, so there's a strategy right there. That's why I'm talking about specific stocks. And I mentioned this last week. Alcoa, AA, it's off another 4% pre-market. It was as high as $80. Now it's $66. Why is that important? Because I mentioned that institutions were rotating out of mining stocks. So we all know that they were in energy. They were in mining stocks, Newmont Mining, NEM, Cleveland Cliffs, CLF, right? AA, Alcoa makes steel. So a lot of these positions were at all-time highs about a week ago. Let's check AA. I think it was like $90. Let's go 1 week back. That's it. $90. So here's the chart from last week. $90. You're at $64 this morning. That's what? $26 from 90. That's 30% in 1 week that this stock dropped. Okay. Next, Lululemon, right? This stock was $416, and the analyst gave you a price target of $510. And what happened? It's now dropped from 416 to 360, 50 points, which is 12%. Now, here's the crazy thing about Lululemon. This stock will find support. So again, if the markets turn around, I expect Lulu to give you a hard bounce. If the markets sell off, I think Lulu can drop half of what it did on Friday. So it dropped 14 points on Friday. It could drop 7 points. So that's what you look for. You have to have a strategy. Your last strategy is Lululemon. It's going to move. If it goes higher, it's going to move higher like this. Okay. I also like Caterpillar. Now, I mentioned Caterpillar was 237 a couple of days ago. It's what, 215 this morning? Where's Caterpillar? Let's see if I can pull that one up. CAT. All right. Yeah. So, I mean, you can see Caterpillar in 2 days basically dropped everything. So where is it pre-market? 215. Okay. So Caterpillar is at its low from Friday. If it's outflow today, it could definitely drop down. And then Caterpillar, if it drops down, could drop back to the 202 range, which is another $14, which is another 6.5%. Now, if Caterpillar bounces, and I say it could bounce because it's Dow related. So even if tech is struggling, if you see the Dow turning green and the Dow getting stronger, you're going to look for Caterpillar to bounce to the high side. So it would probably need to break 218 for me to be bullish on it. But if you get in at 218 and it presses to 223, that's 5 points. It's probably like 40% return. Speaking of return, I'm just looking for 3% today. I've been doing this 9 straight trading days. I had 2 trading days, which I was red, but I made up for it on Friday. So all in all, my trading account, which started at 700, is up at 2,000. So what is that up? That's about 180%. I'm only looking for 3% a day. So if we're 10 trading days in, my account, even compounding it, should be up about 32 to 33%. The fact that my account is up greater than that, closer to 200%, means I don't have to press it. Remember, the most important thing that I want to teach everybody, and this is for old traders, new traders, patience. And when I say patience, you have your strategy like I gave you this morning. I didn't even talk about all the stocks I was going to talk about. You have your strategy. Then you're watching today. Remember, here's your time. Between 9:30 and 10:30, it's going to be volatile. So if you are 100% you're going to be correct, then yes, you can get involved. But other than that, you want the market to settle. You want to be correct about the direction. When you say you think your stock's going up, great. Now that you know you think the stock's going up, you want to buy at the biggest dip. If you think the stocks are going down today, then you're saying, okay, I want to buy or enter my puts when it's up the highest. You're not looking to buy or sell anything on open. You understand that the bid is here at $1. The ask is $1.20. So if you're wrong, you're already off like 16%. Okay. Now, if you're wrong about your position, instead of 16%, add about 30 more onto that. So if you wait and you gain best entry, you're saving yourself like 46%. Yes, you could be in and out. A lot of people like to trade at 9:30 and be out at like 9:45 or 10. And you could do that because the market's volatile. But I would tell you, it's safer, in my opinion, to wait for a more short entry. Okay. So let me just see if there are any quick questions. Options on Tilray. Oh, we're doing questions that way. Yeah, Amazon's going to follow the NASDAQ. So as long as the 10-year goes up, I mean, Amazon will have some downward pressure. However, Amazon has earnings. Let's look at the PE of Amazon, which is the price per earnings of Amazon. Okay. Still, it's $60 is the forward PE, which is pretty high. So yeah, I mean, I guess Amazon could go down. Somebody on my platform said it could go down lower. Technically, it can go down lower. So yeah, that's another reason, I guess, that would control tech. I would more or less like to be in energy, oil, which is beat up. I'm going to look for the bottom of oil or energy today, the bottom of some stocks. I saw somebody asked a question about Tilray, TIL. So that had earnings and that shot up. Options on Tilray. Well, there was demand 2 out of the last 4 days. They were actually buying Tilray on Friday, which is crazy because Friday was a terrible day in the market. Let me just check out the volume. Volume was bad. Now, they don't have earnings. So if you're waiting on Tilray, you're waiting for the government to make an announcement about weed companies again, about legislation legalizing weed. I mean, that's where these stocks will have their catalyst from. Hey, other than that, Coke, you bought Friday, blah, 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 expired this weekend. No earnings was today. Yes, Coke's going to do well today. So, Sarah, no matter what happens in the market today, good day or bad day, Coke has already seen a nice floor. So that's why I'm saying if the market turns around, Sarah, you can hold it. If your options don't expire till Friday, let's look at Coke real quick, and I'll just give you my exit strategy. Again, you don't have to use it, but I'll tell you where I see Coke that they could run to this week. So Coke, 1 month, what is it, an all-time high probably, right? Yep, Coke's at an all-time high, which means things will probably get better each day. I would hold on to that. Listen, everybody's great. I'm losing my voice. I got to take off this morning. Got to go see my kids. They're home from school. Everybody's not feeling so great. But I will be back with Discord in a couple of minutes and see you guys soon.